Every fall, the attention of farmers and ranchers turns to harvest and calf prices. This year's no exception. After 2 years of tough weather, the summer of 2013 graced much of the nation with improved moisture conditions. The improvement in precipitation helped ease feed prices for cattle producers all across our country. To talk more about the changing dynamics of the market is Randy Blach. He's the CEO of CattleFax. Randy, thanks for coming back to the show.
My pleasure, Kevin. Good to be with you.
I keep hearing all these things about this big corn harvest that we have this fall. Talk to us about what you're seeing and what that's going to mean in terms of feed prices as we go into the next several months.
Well, we do have a good corn crop on the way, and it's long overdue. As we know, we've gone through a couple of short crops here in the last few years, and looks like we'll have a record large crop this year, approximately 14 billion bushels. And that's going to give some needed relief to production costs for producers in all these livestock industries, not just cattle producers, but pork and poultry producers alike. So we're going to likely see a 40 to 50 cent change or reduction in cost of gains for cattle feeders here in the United States. So it's a big deal.
And so translate that to what that's going to mean in terms of this feeder calf market.
Well, we've seen the feeder calf market respond. If we think back into the springtime period, feeder calf prices were trading in the 130 to 135 range on a 7.5 weight feeder. So same cattle today would be trading up in here in the 160 area. So I think as we look forward down the road, we're going to continue to see relatively tight beef supplies over the next 6 to 10 months as we go into next spring. Feeder cattle prices are likely going to be very well supported through this time period. So don't be surprised if we see feeder cattle prices average up in here closer to 160 to 165 as we get on into 2014. So a range of probably 155 to 175 for the year.
And let's talk fed cattle for a moment. You know, these feedlots have been just losing boatloads of money over the last couple of years. What is all this going to mean in terms of not only fed cattle prices, but more importantly, profitability at the feedlot level?
Well, that's really a good distinction, Kevin, because we all know that record high prices don't mean record high profits. And if you go back and you think about the last 2 years, we've had just that. We've had record high price fed cattle prices the last 2 years, and yet two of the toughest financial loss years for cattle feeders in the history of the industry. So with the production cost relief that we're going to see with these lower cost of gains, lower feed values, whether it's hay or silage prices, we've just now started to move back into profitability. And the cattle feeders should be profitable from now through the spring of next year. Won't be big profits, won't come back as fast as it went out over the last 18 months, but renewed profitability for the industry.
That's good news.
Absolutely.
Now, Kent was mentioning earlier the importance of the export market and the good news we have to share in that regard. What do you see in terms of export market opportunities moving forward?
Well, the export markets are huge for the U.S. beef industry, for the U.S. livestock industry in total. If we step back and we look at what we do, we export 27% of all of the protein that is traded onto the global market when we combine beef, pork, and poultry. So we're exporting 20 to 25% of all of our pork and poultry production on an annual basis, and about 14% of our beef and beef byproducts. So expanded access to consumers around the world is of utmost importance to us. We only have 4% of the world's population here in the United States, and the population is going to grow another billion people here over the next a few decades. So that export market is key to our industry.
You know, one of the things that we often talk about, or at least I've been talking about lately, is these interest rates. You know, we've experienced record low interest rates for some time now, but I'm hearing clearly some signs of it increasing. What impact is that going to have in the cattle industry?
Well, we have had interest rates that have been at very low levels here the last few years, and it's given people an opportunity to get some of these longer term rates locked in where we can take advantage of some of the cheaper cost of money. And I think that's something that producers in all aspects of this industry need to be looking at, need to be taking a long-term view and say, you know what, these rates are something that we can sure live with here. the odds are very good at some point over the next few years interest rates are going to start to rise, and from these levels they could rise fairly significantly. So we just need to keep that in perspective and not get too greedy when it comes to the cost of money.
Now, I know I always ask you and your team for your perspective on the projections, but I know that they're just projections. So what are some of the wild cards, Randy, that you think might impact how these markets play out?
Well, I think as you look at it, we've talked a little bit about the relief that we've had in feed cost, and Bob explained very well, we've seen some relief in some of our grazing country across the United States, and that's been welcome relief. So those are key. We need to see this drought situation continue to go away. We've been fighting drought for the last decade. So that's obviously an important one, and I think we're on the right trail. The other thing that we need to see is we need to get more people back to work. We still have too high unemployment. The U.S. economy has not been growing as fast as economies around the world. That's something we need to change. We need to see more people get back to work. That'll help the demand for our products as people have more jingle in their pocket. Continued access to these global markets is huge, as we've, I think, already explained. So expanded access to countries we don't have access to today, and direct access is obviously important. So those would be the key things that I would say that when we look at our industry. And maybe as I wrap up those thoughts is we need to see the cow-calf producer. They needed a payday. Mm-hmm. And obviously with the improved moisture situation, some reduced feed prices, hopefully those producers will see a big enough profit target that they will in fact expand the herd.
Randy, thank you so much for once again coming to the show and sharing your insights. We really appreciate it.
It's my pleasure. Always good to be with you, Kevin.
Thank you. For more detailed market information, just visit CattleFax.com, or you can visit our website. That's cattlemantocattleman.org.